Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Anna Kelly. Hi, Anna.
Hi, Michael.
How are you?
I'm doing great. Always good to be here with you on Wednesdays.
Yeah, I'm going to use this lucky episode number 4 to frankly vent.
I'm ready.
Yeah. So folks that don't know your story, obviously you've earned financial freedom really with small multis, maybe some partnerships, but you've also moved into syndications, doing some much larger deals. You are a conservative investor. You are not doing the things that I'm about to vent about. I have seen, because I'm an accredited investor, as are you. I am on many lists, and I have seen some, I'm going to call it almost criminal behavior in the last 10 days, maybe 15 days. And I want to vent because I see some general partners, some GPs trying to get deals done at the tippity top of the market today, hundreds and hundreds of units, tens of millions of dollars. And when I see their perspective, they still promise the, double-digit return, and they're going to go in and do value add, and they're going to scoop the equity. And the story is the same as the last couple of years. But I'm a student of the game. I watch every day, and the assumptions that I see to get those double-digit returns, it's somewhere between bad and horrible and dishonest, somewhere in that spectrum. And this is what I mean. And I'm sorry, I'm definitely venting because I see a lot of LPs. They're going to join these people because they have great names. They wrote a couple of books, whatever. They're assuming that cap rates are going to stay even or only go up 1/10 of a point a year, which is kind of the historical norm.
Right.
Folks, we're coming off the bottom. This is not reality. 2, they are assuming that they're going to refi out of bridge debt in a year or two, somewhere in the 4s. No, folks, it's going to be in the 6s.
Or more.
Or more. Come on, guys. This is criminal. And then, oh, by the way, they're assuming crazy rent growth. I actually think rent growth is going to be flat to negative. And they're still assuming record occupancy. I mean, there's nothing in these perspectives that I think are conservative assumptions. I don't think all syndications are bad. I think some, but they are getting proportionately worse and worse. And I think there's some almost criminal behavior going on right now with some of these assumptions. So sorry, I had to vent.
Here's the thing, Michael, you're right. And I've kind of talked about this. I mean, it's tough because syndicators, especially if they have a large team, they got to keep people employed.
Exactly.
They got to keep doing deals. And I'm a syndicator, but I've been very, very selective. I've only done one large multifamily purchase in the last year, and it was a recession resilient deal with 7 years of fixed interest below 4, right?
Exactly.
So it gives us time to do that value add. It's in an area where we've got already a lot of vacancy, economic, issues. They poorly updated. They haven't been updated in decades, right? So just bringing it to an average standard today, we're going to have some upside without having to go high. But what's happening is people are still purchasing properties at the top value where rents are already average, and they're assuming they can still put in sexy appliances, sexy floors. Sometimes they've only been renovated, 7-10 years ago, and they think people are going to keep paying for those sexy amenities. The reality is when we're in a deep recession and people are losing jobs and their gas is up and their food is up, they don't care about nicer appliances or nicer floors. They just want a good, safe, clean place to live. So these value add deals, generally speaking, and there are exceptions, right? To your point, most of the value add deals, because they're still top price, they have to be very, very aggressive on their underwriting. And the exit caps, not modeling cap rates coming down, is a huge problem. So I'll talk to that first. One of the issues is that the big brokers like Marcus and Millichap, CBRE, et cetera, they're putting out reports that are saying cap rates aren't going to come down, right? Historically, even if rates go up.
Cap rates aren't going to go up, sorry.
I'm sorry, that they're not going to go up. Yes, that values won't come down, cap rates won't go up because historically, supposedly, they're not that tied to interest rates. That is flat out not true. But a lot of these newer investors who've been investing or syndicating less than a decade don't understand that.
I'm worried about the person that's got 2 or 3 years. They lucked into the best timing. I sold an apartment building in 19 at a 5.8 cap. My low, because I've been doing it 20 years, was 6. So I got out. It went as low as 4.5. That's not normal. It's going to spike back. It's going to go on it to 7.5, 8, 8.5.
Yeah. And with rates continuing to go up, there has to be a premium and a reason to invest and take the risk of multifamily. So your cap rates have to go up, your values do come down. So a value add deal has to not only make up for increased rents and values at today, but they have to assume values are going to actually start to come down. And the vast majority is still being done with bridge debt. And so if you see bridge debt, I don't care how much you like the operator, run.
Run.
At this point, unless you're very, very, very wealthy and you can take some risk with a small amount of your dollars, if that floats your boat, fine, right? But
that's not most of you.
No, for most of you, don't do any deals that have bridge debt and that assume big rent bumps and that assume a refi in a couple of years at low rates. You just shouldn't do it, right? Now, again, some syndicators, what you do want if you're investing in multifamily, because listen, multifamily is very recession resilient. And if you can buy it at the right price and you have a longer term hold period, I'm going to own it for 5, 7, 10 years, whatever it takes to get back up to the top and sell at the most opportune time. If they have low debt on that deal, it's 60% leveraged, right? And there's a huge management value add play just to get it to where it is today, conservative exit caps that are higher. You can still find a few good deals, but they are few and far between. I would venture to say, I said a couple of months ago, probably 95% of the deals that I'm seeing are dangerous and dogs. Right now, it's probably 98% of the deals are dangerous and dogs. You have to be very careful.
I want to say that again, 98% of the deals. And I think that's conservative. It might be 99 point something. Yeah. I'm sure there are good deals out there. Like the deal you did that already had 7-year debt. You were assuming perfect. Cool.
Yes.
I want to say it again. If you have bridge debt to get the deal done, run. Anybody watching my channel is you don't have deep enough pockets. You're not watching YouTube.
Right.
Got those kind of pockets. So again, if you're watching this, run from there. Again, what does Warren Buffett tell us all the time? We're going to find out who's swimming naked. And I want to be very clear. There are people with these platinum diamond reputations, or at least you think they have. They have built up teams and overhead where they have to have deal flow to pay the bills. They are now telling you about assets under management, AUM. They are trying to impress you with size. That should scare you. They have to do deals. Buying a deal today at the top of the market with bridge debt, horrible, stupid, darn near criminal assumptions. There are LPs that are signing deals today that will never see that money. It's gone.
And it's very unfortunate. And it's already happened, right? It's already happened. There's a lot of syndicators who aren't paying out right now, and they're going to continue. So listen, I am a syndicator, right? And I'm presenting my investors very few deals, very, very few deals, because every market has their pluses and minuses and has different risk. And the reality is larger commercial properties are very impacted by interest rate and recession, right? So it can be a safe place to park your money. I'm looking for more, right? But they have to meet the fundamentals, and you have to be extremely conservative in your underwriting before you invest. I would rather see most investors take their own money and buy a fourplex in a really great market than invest passively as an LP. Your returns will be better.
Today, absolutely.
Yeah. Now, if you don't want to be active and you're a total passive investor, and listen, full disclosure, I'm about to invest in a syndicated deal.
As an LP.
Small amount of money as an LP, but it checks the boxes. It's an off-market deal. The population growth, the lack of ability to build, the jobs that are coming to that market are so strong that I thought, you know what, if I invest 50 grand and I lose it, I can afford to lose that 50 grand, right? It's a small amount of money, but it has the fundamentals that I think will preserve value and hopefully have upside. And if not, at least it's preserved and I get some bonus depreciation. But you have to be experienced enough and be able to put that kind of money aside that you can afford to lose. Yeah. Don't be stupid and go all in just because of somebody's track record over the last couple of years.
Yeah, just because somebody wrote a book doesn't make them a great investor. Just because somebody can point at the last 2 years doesn't make them a good investor. I want to know somebody who survived the '08 crash. That's what I want. Again, I think syndication is a great business most of the time. I think bigger is better most of the time. We are in an environment where I've already told you, I'm only looking at duplexes through quads because I want the most rent for my buck. I want to get seller financing, right? This is my little marketing thing. I will buy apartments, but I'm going to let all these idiots who, bought in my market in the 4s, I'm going to buy them back in the 7s.
Yeah.
And again, I just feel bad for LPs who are buying somebody's reputation, buying someone's social media nonsense. You're signing deals, you're wiring money that you will never see back.
Right, right. You need to look at how long they've been syndicating deals, and you need to look very, very carefully at their underwriting assumptions. Those two things are going to be what saves you, as well as the market and the tenant demographic that they're serving.
Yeah, when you're looking at a proposal, one, we've already said, if you see bridge debt today, run. Second thing I would tell them is the assumption of cap rate. They might be buying at a 4.5. What are they looking to sell at? Second, how are they looking to get out of the debt? Is it, I saw one yesterday where the assumption was 4.75 30 or interest rate. I'm like, you got a time machine somewhere? I mean, what the hell?
Already rates at Fannie and Freddie for like 65, 55% LTV are in the fives.
And where do you think they're going to go after another 75, June, July, September? Come on,
right,
folks.
Right. Be careful.
Yeah. So Anna, I vented. Hope obviously you and I know each other. You know, none of this was aimed at you.
Right.
But man, there are some bad syndicators. They're going to lose a lot of people money. So I just had to get off my chest.
100%. I think you're right. You know, we want to tell you the good, bad, and the ugly. Here's the other thing to be really careful about. In really greedy times, a lot of shysters come out of the woodwork, and they look like they have experience. Sometimes they buy an LLC that has experience. They buy their daddy's LLC that has experience. There's a lot of shysters that come out. You've got to be very, very careful. The same thing happens in a major downturn. A lot of shysters come out and they tell you to get in, and they tell you to do it the wrong way, the unethical way, a way that's going to hurt you. You need to be very, very careful about who you do business with in this market and in any market.
Absolutely. Anna's one of the ones you can follow. Where can people follow you, Anna?
Great. You can find me at reimom.com, and you can find me on social media at Anna Kelly REI Mom, and here every Wednesday.
Thank you, Anna. Take care.
Thank you.